Hey guys, here we're getting ready to go over some charts. I'm sure you know that song, Dire Straits, Money for Nothing. No, that's not the euro, that's New Zealand dollar to US dollar. But we're going to go over it in 1 second. Gotta love that song, right? Money for Nothing, it's an oldie but goodie. Um, so let's get to it as far as what's going on around the world here, real quick. I'm sure you guys heard Greece has officially, or hasn't officially defaulted yet because the deadline is tonight at midnight. But the finance minister from Greece came out and said they will not be paying the IMF before midnight tonight. So basically, basically they will be defaulting. Um, you're right; it could be part of negotiating, but this is the third time the deadline was extended. This deadline tonight. They want it extended just a few more days. Why the IMF and the ECB doesn't do it is beyond me. They want to extend it to the 6th of July so they can get the referendum in on July 5th. Um, they who knows if they'll extend it or not. Even if they don't extend it, they're still going to have the referendum. If the referendum passes, they could then go back to the IMF, the ECB, and accept the terms. And I'm sure that they'll be okay with it. Curiously enough, we did write a post on our blog last week or so. It was a conspiracy theory. We're not big on conspiracy theories, but it was something that we did think of. We wanted to bring up to you guys, and it was how Goldman Sachs, their number one call for 2015 is to short the euro US dollar and or to short the euro, I should say. And what Goldman wants, Goldman gets a lot, man. They wanted Lehman to be made an example of during the financial crisis, and they were. They're one of the largest and most influential investment firms or financial firms out on the street, and they have a lot of not a lot, but they have quite a few of their past employees are working at central banks, even including the Fed here in the States. So it's something it was just something we threw out there. Again, it's a conspiracy. I'm suggesting that Goldman Sachs, they may really be in it, and they may really want the Greece to be kicked out of the euro, because if they do, it's going to force the ECB's hand to increase QE, which will further weaken the euro, is basically what we're getting at. Again, it's just a conspiracy theory, just more for fun than anything else, not putting money on it or anything. But just a thought. Again, as we said, Goldman Sachs is very powerful. They did it to Lehman Brothers. They could very well easily do it to Greece. The other thing we talked about in, I believe, yesterday's session was this whole thing about capital controls, and also possibly confiscating people's money from the banks. They did it in Cyprus. What was it, a year and a half, 2 years ago? It was sort of like the test run. Can we do it in Cyprus and get away with it without having massive uprising and a coup or a revolution? They did. And we said that since they pulled it off there, they will do it in the larger country. And our prediction was several countries. Greece was one of them. Italy was another. And it's very well possible that this could go down that road. I don't think it will, but it's very, very well possible that it goes all the way. They're already doing capital controls. The average a person in Greece cannot take out more than 60 euros out of the banks, or the banks are all closed. So out of the ATM machines for the next week, which is equivalent to about 66 US dollars. And it was just announced today, and this is how crazy things are. They're restricting the pensioners, so people that receive pensions through the Greece. They originally said that they could take out $270 a week, and then they retracted from that, and they came out and they said they could take out 120 euros per week. So they didn't even make the right announcement. The average Greek person gets that receives a pension from Greece is getting about $650 a week. So it went from 650 to 120. And then, like I said, if you were going to make withdrawals out of your Greek bank account, you're restricted to 60 euros per day. So not a good situation at all. Curious to see how it all unfolds. With all that said, we're staying away from the euro as far as trading it. We do have a couple of euro positions, but they're correlated. We'll go over that in a minute. But we've had them on for weeks on end. Oh, and the other thing we wanted to bring up too was we're hearing some stuff on some underground sites that leaked. It shows leaked NSA cable documents show that the French economy is in dire straits. Don't know, never been to France, but just things that we're reading. We all know that Italy is not having a good time either. So just Eurozone is just not in a good position at all. Socialism doesn't work. We know that. Unfortunately, here in the States, we've been going down a socialistic path, and more so every year. Especially since Obama's been in place. And I'm not going to go down a political road, political discussion on that at all. But it's obvious what he's doing, and it's obvious what the left is doing in this country. They want to go down that that socialistic path. Unfortunately, here. So we'll see. Hopefully things can change here in the States and they can turn it around. I mean, I'll tell you this: Bill Clinton, who is a Democrat, John F. Kennedy, who is a Democrat. Those two guys in today's day could not get elected as a Democrat. They're too center. They are too centered of a Democrat to appeal to the party. And I'll also say Ronald Reagan, who was the Republican rock star over the last 40 years, could not get elected as a Republican either. He's too centered. So both parties have gone to the extreme. I hate it. I can't stand it. And I wish they would go back to their roots, and we can all get on with things here in the States. But like I said, both parties have gone to the extreme ends of the spectrum, and not cool at all. Okay, that's enough of that. So let's get to it. New Zealand dollar, US dollar. This was one that we brought up yesterday. This is a 4-hour chart that you're looking at here. Let me show you the whole thing real quick. Okay, on the 4-hour chart, which goes back about a month, a little over a month time frame here, is obviously in a downtrend. The blue here that you see is a forecast by our algorithm. Now, we are forecasting out 24 candles. Unfortunately, the 24 candles is below the chart itself. So that's why you're not seeing it. We're up here. You also see we have a 93% chance of a prediction chance, chance performance prediction, we call it, of this playing out. We had brought this up yesterday as well. I believe it was trading somewhere up here, and we were looking to take this thing short. If it took out this basic little consolidation range here, because we had the algorithm pointing down, we had a high percentage chance. We had the consolidation, and a break of a consolidation would mean to take it short. So it was a really nice trade on our part. We'll take that all day long. Nice move on that chart for sure. Pound US dollar was one we brought up yesterday. The algorithm was actually calling for a move higher, but the move higher had to come out of a break of this, if you want to call this a consolidation, because we had the gap down on Sunday from the news from Greece, right, that the talks fell apart. And then we had this thing, we didn't look at it Sunday night, we looked at it Monday morning. We had this thing consolidate, if you want to call this a consolidation, we had the big spike up and then it was coming down. When we were doing the video yesterday morning, it was somewhere in here, in this area. So even though the algorithm was looking for a break higher, we had said if it takes out this peak up here, obviously as you see, it did not do it. It didn't even get close to it. Well, the algorithm has now switched, okay? So every 4 hours, this thing is going to make a recalculation. It just recalculated at 4 minutes ago, right? 8 o'clock here on the East Coast. So again, if the pound US dollar with the way this chart is looking, I mean, we don't rely on the algorithm solely. We do technical analysis. We use it to confirm what we're looking at. We also use some other indicators as well. There's vortexes, there's many different. We like to look at volume levels as well. But we're just showing you what the algorithm is actually predicting by itself. So we're looking at this 90% chance of this thing pulling in, right? 24 candlesticks. This looks like a 250 pip move at probably at minimum 200. But we have these two bottoms. We have a bottom here from on Sunday, and then we have a bottom here from, I think that's June 24th. If we could take that bottom out by, say, 10 to 20 pips, so call it 1.56, 1.5640, 50 to 40, okay, or 45 to 40. If it takes that out, we could see a move down lower, at least to 55.98, which would give you about 40 or 50 pips for a quick move. Or we could see she could make a move all the way down to here, very easily down to 53.50, which would basically be about a 100 pip move. And if we could take that out, we could be looking at 1.5483, possibly as low as the figure of 1.54. Thank you for the hearts, by the way, guys. So that, that's a good move there, potential good move on pound US dollar. Again, I totally look for it to take out these bottoms from Sunday and from June 24th. 90% chance that it happens, or I should say 90% chance that if it takes those bottoms out, she's going to run lower, is the way we look at it. A lot of the other pairs down here on the bottom, just they're not giving us a good reading. Whether maybe they're too choppy. You look at Aussie US dollar, very choppy action. Don't like it. US dollar, Canadian dollar, kind of choppy. Not too bad, but we're only getting a 64% chance of a move higher, and we got double tops there. I'm not a fan of it. Pound yen, pretty choppy. Euro yen, very choppy. Aussie yen, very choppy. So the other last one to keep an eye on would be US dollar to Singapore dollar. It did make the recalculation 7 minutes ago. It was looking a little better before the calculation and before we started this. So we'll take that off the table. It was only like a 65% chance of a move happening. The algorithm has now calculated a 67% chance, and it's basically looking for a consolidation between 1.3486 and 1.3433. So about a 50 pip, call it a 50, 60 pip consolidation, over the next 24 candles on 4-hour charts. So whatever that is, next few days. So not too crazy about that. Want to show you our correlation trades. Now, I'll just explain this real quick. We went over this yesterday. This is a correlation. I'll show you this, and this is, by the way, you could look at TradingView. This is a trading chart from TradingView that we post these when we do our analysis with correlations, and every once in a while when we do an analysis with certain trades. Again, thank you for the hearts, guys. We post them on TradingView, which is great charts, and it also has a social aspect to it. But this is a correlation trade between Euro, Pound, and Euro Yen, okay? And you can see how they move together, okay? Now, with the correlation trade, let me zoom in on this a little bit more if I can. Okay, with a correlation trade, you want to look at daily charts, and you want to look at least a year's worth, okay? And on this correlation trade, over the past year, it was approximately 500 pip move between the two pairs. And the correlation also on this pair, I don't think I have it here in the, no, we don't have it in our description, but the correlation on this pair was in the vicinity of 75 to 80% time that they're correlated, which means that they're going to move together, okay? And you can see, let me go back here. You can see the correlations, they widen. See here how wide it was? And then they'll narrow. And look how narrow. They actually narrowed so much that they touched. Then they got wide again here, this top up here, right? This top up here. And here got wide. And sure enough, they narrowed. They narrowed here, right? They narrowed here. And then they narrowed here again where they actually touched, right? Then there was the correlation was really solid for many days. That's actually several months. And then it started to get widen again. I believe around here we put on a correlation trade as it was wide, and then it started to narrow a little bit with these two tops as this one was coming down, and we covered it. You don't have to wait for the correlation to completely close. You just want it to narrow enough where you're happy with your profit. And this is where we put it on with these two arrows. At that time was about 400 pip spread. We only put on half our intended size, okay? That doesn't mean we put on half our normal size. So, on a scalp, we're going to trade much larger. If we're doing a swing trade like those charts we were just kind of showing you, we're going to trade smaller than a scalp. On a correlated trade, you're putting on both sides, and you're going to calculate how much size you want to put on and then ease into it. So with this, we put on 50% of our intended size, and then if the spread happened to get wider, we'll put in on, say, 10% tranches, right? So on this one, we're up to I believe we're up to 70% of our intended size. With that said, we put it on. The spread actually got to about 550 pips when we put on our second tranche to get it to 70%. And you can see what happened here just recently. On this pair, this currency, this correlated trade, we're actually about flat. We've been down the entire time. We've had it now for about 5 weeks. I said earlier we're not going to trade the euro because of what's going on in Greece. But these positions have been on for probably 5 or 6 weeks now. So what has happened here, just with the news from Greece, we had the euro pound is the chart here, and the euro yen is the blue line. The euro pound had a spike, and the euro yen has come down. So right now the spread's about 440 pips or so, 450 pips, where we put it on initially at 400 pip spread, and it got to about 550. So we're right around breaking even right now as far as the spreads go. And if this thing can come in further, one way or the other, you can have the euro yen come down faster than euro pound. You could have euro pound move up faster than euro yen. You could have them both move, whatever it takes for that spread to narrow. And we also know that like I said, we didn't put down the percent of time that they are correlated. I know it's somewhere in the vicinity of 75 to 80% over the past year. So we have that in our favor. So we know it's a 75 to 80% chance that the spread is going to narrow eventually. Like I said, we've been in this thing probably close to about 6 weeks now. So you have to take into consideration if you're in it for days or weeks or months, you have to take into consideration any interest charges that are building up before you liquidate the position and take your profits, obviously, right? The other one I wanted to show you that we have on is Canadian dollar, Japanese yen to pound yen. Oops, did I? Yeah, I did. Okay. So let me just change this to a line for you guys so you can see it better. Okay, let me show you the whole thing. Again, Canadian dollar yen to pound yen. Okay. Again, you can find this on TradingView.com. It'll be there where we are unique Forex on TradingView. But this, you can see how highly correlated they are. This one we actually put down in our description, in our analysis, how much they're correlated, which they're actually correlated 77% of the time over the past year. Now, when we look for correlated trades, we are looking for anywhere from 70% or higher, preferably 80% or higher. This one was 77%. Okay, so this, as I said, 77% of the time they've been correlated over the past year. Over the past year, the spread has been about as wide as about 800 pips. When we put this on, again, we put on half our intended size. At that time was about 620 pips, and then we eased in with another 10%, and then another 10%. We're up to 70% as well on this one of our intended size. This position we're down on. We've been in this one about five to 6 weeks as well. We know we got 77% chance that this thing will close eventually. And you can see here, going over the chart, you can see how wide it got here, how it narrowed. This is not all that wide, but it did get wide and then narrow. Here, you can see how wide it was, and then it narrowed so much it touched in this zone. Here's a great example, how wide it got, right, in this area, and then how it touched, completely narrowed. We may have been a little early here, and we knew that going in when it was, again, about 800 pips is the max spread. It was 620. We probably should have waited at least until 700 pip spread. If we had done that, we'd probably be flat to up right now. So our cost average is probably somewhere in the neighborhood of a 700 pip spread. So we're not down a whole lot. So we're down a little bit. We will get in more if the spread starts to widen again. We'll get into the rest. We'll get into another 10%. If it continues to widen, we get into another 10% until we're at 100%. Now, people will say, and we've had this question, well, this is Canadian dollar yen to pound yen. Canadian dollar yen is the currency pair chart, and pound yen is the blue line. So people will say, well, why don't you just trade, Canadian dollar, let's say pound to Canadian dollar, say pound to Canadian dollar, right? So our answer is this: one, if you trade just one pair, and pound to Canadian dollar is not one of these two, but let's just say you chose to choose pound to Canadian dollar, you have to be right in your direction, right? If you're going long, it's got to go up for you to make money. If you're going short, it's got to go down for you to make money. If it goes the opposite, you're going to lose. If it goes the opposite and you get stopped out, you have lost, right? So by taking a correlation, one, you're greatly reducing your directional risk. We don't know what's going to transpire here, right? So even though this spread is as wide as it is now, when it narrows, which it has done here, it can narrow by the Canadian dollar yen going up faster than the pound yen goes up. Maybe the pound yen starts to just hover or consolidate and the Canadian dollar starts to move. Maybe the Canadian dollar, Japanese yen is kind of consolidating or going down slowly, and pound yen starts to come down quickly, right? Or maybe the Canadian dollar, Japanese yen starts to rise at a decent pace, and the pound yen starts to fall at a decent pace. So how can those things happen? Well, you have a myriad of reasons. You have economic reasons, how different currencies trade in their economies and in their geopolitical situation, how these pairs trade in the countries that it's paired up against. So how does the Canadian loonie trade against the Japanese yen? How does it trade against the economy of Japan? How does it trade against the geopolitical situation in Japan? How does the pound trade against against the economy in the UK, the geopolitical system in the UK? How does the pound trade against the Japanese yen and the economy of in Japan and the geopolitical situation in Japan? Also, you have three pairs, you have three currencies, right? I don't know if you probably can't see that, but you have Canada, right? So you have their currency this is Canada here. You have their currency, their economy, their geopolitical system. You got the Japanese yen, right? Which is the Japanese economy, Japanese geopolitical system. And then you have the pound. So you have the UK economy and the UK politics involved. So again, by taking a correlation trade, we're greatly reducing directional risk. And two, you have three currencies involved, not just a currency pair, which is just two currencies. You have three currencies involved, so you have an outlying piece to the equation to say, right? Again, if I'm going to trade just Canadian dollar, Japanese yen, it's just how Canada and the Japanese yen trade against each other, how the Canada economy trades against Japanese economy, and vice versa. But now, all of a sudden, you're thrown into the situation, the UK. So it adds to the mix. It adds to it increases your chances of having a profitable trade. And again, as I just explained, you can have a profitable trade several different ways. You could have the pound to yen come down faster than Canadian dollar or Japanese yen goes down. Maybe the Canadian dollar, Japanese yen consolidates, and then the pound to yen comes down, or vice versa. You have the Canadian dollar, Japanese yen starting to rally. You have the pound to yen consolidating, or maybe rallying very slowly. Or you have the revert. You have the complete opposite moves. You have Canadian dollar, Japanese yen start to rally, and pound to yen start to come in. Obviously, they can both widen on you, and that's what happened when we got in. We got in a little early, obviously, and then it started to widen. But when they start to narrow, we'll take our profits. Again, you don't have to wait. You don't have to wait for a complete narrow where they completely touch. If you do, you're going to kill it, right? But as soon as they start to narrow and you're up enough where you're happy, you're up enough where you're covering if you have interest charges. We've been in these things where they've lasted several hours. We've been in these things they've lasted a day or two. If that's a situation, you really don't have to worry about the interest charges. It's so small. We've been in this thing. We've been in correlation trades where they've lasted, say, a week or two, and we've been in them where they've lasted, a few months, 2 to 3 months, 4 months. So this one, these, and the other one we showed you, the euro yen, the euro pound, we've been in them we're going on 6 weeks now, which is okay. We're not using a ton of leverage, so our interest charges aren't that bad at all. We're not a fan of leverage anyway. Leverage is a double-edged sword. But that's some of the things that we do. I wanted to share that correlation trades with you. Let's just see what's going on here with the pound, the US dollar, if it's made a move yet. No, we just got a little bit of a pop here. So far, still in this consolidation range. So again, like I said, if it takes out of what? Euro pound. We're really not. I don't know if you're just new to this stream just before we started earlier. But what we have with, I'll show you what we have with euro pound. I can't tell you how much we're going to do it because it's not a directional play. It's a correlated trade. Okay, so the graph, the green and red graph that you see here, the candlesticks, is the euro pound, because you had asked how many, what our profit target is on euro pound. We're in this as a correlation with euro yen. Euro yen is the blue. Yeah, no problem, dude. That's cool. Again, if they're starting to narrow, we're about breaking even on this. Actually, right when the news broke Sunday night that the situation in Greece broke down, we were actually up pretty good, but we're looking for a lot more than what we were up. So we're very comfortable holding. So I don't know, to answer your question, I don't know what euro pound. We don't have a profit target. We don't have a profit target for the euro yen. You can't, because we don't know when this correlation will start to close, just as it did here. See how wide it was, and then it closed. And again, we were in this trade. We didn't wait for this to happen. We didn't wait for that close to happen. We got out somewhere as this was happening, as this close was happening, this move up in the euro pound and this move down in euro yen. Somewhere in here, we took the profits. Maybe 80 pips between the two. Maybe it was 100 and some odd pips. I don't really recall. But I know we were in the trade. And that only took a matter of, this is a daily chart, so it only took a matter of maybe a week or so, 10 days. So that was a really easy trade. If we had waited for this to happen, we would have made even more. Again, the other thing I forgot to mention, on this correlation here, on this correlated trade, you have to take into consideration that euro pound, for every pip you make or lose in euro pound, it's more than 1-to-1. So in other words, what I'm trying to say is euro US dollar, for example, euro US dollar, basically if you make 1 pip on trading, say a 10,000 lot, you're making $1, right? On euro pound, for every 1 pip you make on a 10,000 block, you're making or losing $1.50. Okay, so you have to take that in consideration when you do your size. So let's say you're going to trade $1 million worth of euro yen, you'd have to trade, you'd have to trade less of the euro pound. So you have to take that into consideration. Anyway, so that's it. We're going to wrap it up, man. Hope you had. Hope this helped you. The correlations with our algorithm again. We're looking for this pound US dollar to break, but we're waiting for it to break these two bottoms. Again, we'll just go over it real quick from Sunday when the announcement came about the Greek talks falling apart, and then June 24th, those two bottoms. So if we could take that out, and the algorithm is still looking for the same conditions when that's happening. Right now, it's 90% chance that this is going to come in. We'll have a really nice trade on our hands for there. And New Zealand dollar, US dollar, this was one that we went over yesterday. It was somewhere around 92%. Right now, it's 93%. If I remember correctly, it was about 92% chance of it coming down. And we took it when it took out this consolidation area. We took that short. Again, 4-hour charts for you guys unaware. US dollar, Singapore dollar was looking decent but not great before it recalculated 26 minutes ago now, and it's calling for a 67% chance that this thing consolidates, that this pair consolidates going forward. But this is one to watch. Only because every 4 hours it recalculates on a 4-hour chart, obviously. So we got 3.5 hours before it'll recalculate. We're going to watch it around lunch. We'll look at it again later this afternoon and then this evening and see. This thing, depending on the price action going forward, especially this evening when the Asian markets start to open. This is the US dollar to the Singapore dollar. This calculation could change. It could show a move higher or lower. I don't know. And it could also have a higher. We like to trade when the prediction is higher than 70%. Right now, it's only 67%. I'll show you that. Pound US dollar. I don't know if I could show you. A pound US dollar, that's a 90% prediction. And New Zealand dollar, US dollar, that is 93%. Yesterday it was about 90. I believe it was around 92% yesterday. So that's what I'm talking about when I say it gives the prediction, performance prediction. So really keen on this pound US dollar. One to look out if it takes out those bottoms. Again, don't look for it to take out those bottoms by a couple of pips. Look to take out these bottoms by 10, 15, 20 pips. You want to give it some room. You could just go to our website. We're uniqueforex.com. That's let me see if I could type it to you guys. I don't know how this thing works. Hold on. I don't think I could type, can I? Anyway, you go to uniqueforex.com. That's with the number 4 and the letter X as an X-ray. You could go to forextrading.uniqueforex.com, and you can sign up and get a 30-day free trial of the indicator. We don't use our algorithm solely. We don't rely only on this, as I stated earlier. We look to confirm what we're seeing in the charts, right? So pound US dollar, we're looking had a run up here in the 4-hour charts, had a run up, it rolled over, and it's consolidating. So it's confirming my thought that, okay, it ran up, rolled over, consolidated, could very well break down or up out of this consolidation range. It's telling me 90% chance that if it breaks down, she's going to run down. I'll take those odds. But depending on the price action over the next 4, 8, 12 hours, this thing could flip and reverse, and it could then be looking for a breakout on the upside, which it was yesterday, which never happened. It never took out that high. So you have to just stay on top of it, I guess is what I'm saying. And you also have to use it as confirmation of what you're seeing, whether it's from your eyes or from other indicators that you use. That's how we use the algorithm. There's really not much out there like it's giving you. It gives great forecasts. Anyway, you could go to forextrading.uniqueforex.com. Again, that's with the number 4 and the letter X as an X-ray. Or you could go to uniqueforex.com. I believe you could get to the Unique Forex is for our family and friends that we manage money. If you go to if you go to forextrading.uniqueforex.com, that's for traders. You have an account at a broker wherever, and you want to use our tools, you're more than welcome to. We for anyone out there that's in Europe, Middle East, Asia, we've struck a deal with a broker dealer, and we're going to be putting something together. We're going to be allowing, I should say, we're going to be giving rebates. They have very competitive spreads, but we're going to be giving a rebate somewhere in the neighborhood of about 2/10 of a pip rebate for every trade that you do, and then based on trading volumes, if you do the volumes that we want, you'll get all our tools for free, which is this indicator, our group chat on WhatsApp, our signals that go out via email, and our other signals that go out solely in the group chat. So you'll get a myriad of things that you could use, which is it's a value of well over $100 a month, but that will be based on trading volume. But needless to say, you'll be getting rebates for every trade that you do. It's going to be somewhere in the vicinity of 2/10 of a pip. So we just haven't put that all together yet. We just solidified the deal a week or so ago. We're going to put together a website for it. Unfortunately, it's not for U.S. residents. U.S. residents can't have accounts over there. But that's the way it is. Anyway, so that's it. We're going to wrap it up. If you're trading, good luck. We're going to be taking the rest of this week off as the holidays come in here. So we won't be trading. We may do a video. I don't know. Maybe kind of see what we're looking at. Kind of tell you guys what we're looking at. I don't know. We'll see how that goes. But if not, we will definitely be doing the videos next week. Thank you very much. Give the hearts if you want. We can always use more hearts. We're also going to post this video on YouTube. That'll be on there in the next, hour or so. Hopefully, if everything goes smooth with technology and computers. So it'll be on YouTube. Yesterday's video is on there. Again, if you go to our website, uniqueforex.com, there's a link to the YouTube channel. And you can, this way you guys can view it whenever you want. You can go back and review it and stuff, because I know these Periscopes, they expire in 24 hours and stuff. So that's it. It's good luck trading, and maybe we'll see you tomorrow morning. We'll see how it goes. Like I said, we're taking the rest of the week off. All right, good luck, guys.